PK Basu, would you agree to what Manish Bariyar has said? I mean, at the end of the day, let's just look at this. Just bare about 3 stocks in total between Sensex and Nifty that have managed to be in green. Everything else is in red.
Well, of course, today there's a massive sell-off in global markets, and that is a consequence of this so-called fear of a US or global recession. I think these fears are completely overblown. There's going to be no US recession. There is going to be a slowdown. There's no doubt that economic growth will decelerate significantly in the US as a result of this. The Trump administration is willing to take the hit in terms of growth because it is focused on the longer term imperative of boosting its own manufacturing sector, which has been hollowed out over the last 40 years, especially by China. I think the US is quite willing to negotiate mutual tariff reductions with most countries. We know that the US is already talking to India. Vietnam has said very openly that it is willing to discuss substantial reductions in tariffs that it charges the US. So, globally, the only country that has retaliated is China. And China is going to face a significant crisis now because China has a massive oversupply of every kind of industry. It has oversupply of real estate, about double the amount of real estate as there is demand for. So all of this is going to come to a head now, and escalating the trade war with the US is completely foolish for China. It just shoots itself in the foot. Now, with regard to oil prices, you look at Brent crude today is down to $63 a barrel. In any case, after Trump became president, after he was elected, prices came down from about $80 a barrel to just below $70 a barrel until about a week ago. And now they're down to $63 a barrel. So we are seeing a substantial reduction in oil prices, which will benefit India. The current account will benefit hugely. And in terms of our exports, if you look at our key exports, IT is not subject to, the software exports are not subject to any new tariffs in the US. Pharmaceuticals are not subject to any new tariffs in the US. And things like
you
textiles
saw that
and
even
garments,
the IT sector, for that matter, had bled today. You may say it's not subject to new tax in the United States in terms of the new tax or reciprocal, but they were bleeding today.
Yes, they were bleeding because of this overblown fear of a global recession. Of course, if there's a global recession or a US recession, the IT sector is very it's almost entirely export oriented, and therefore it will suffer, not because any tariffs have been imposed, but because growth in its markets will slow down. So that is a legitimate fear. In my view, it's an overblown fear. There's no recession about to happen, but economic growth is going to be slower, substantially slower in the US and perhaps most of the world. That's not a recession, it is a slowing of growth. Okay, now, with regard to some of the other things, it's important to understand that textiles, garments, and oil, those are two sectors where India has lost market share to Vietnam and Bangladesh over the last 10 years. Now, Bangladesh has to pay a 37% tariff. It was zero. By the way, Bangladesh and Vietnam had GSP benefits. Developing countries get this generalized system of preferences, which is basically zero tariffs on textiles and garments. On India, this was withdrawn by Trump in the last administration. In June 2017, he withdrew the GSP benefits to India. So India was paying higher tariffs in the US for textile and garments exported there than Vietnam and Bangladesh were paying. Now it's reversed. India is going to pay 26%. Bangladesh is going to pay 37%. And Vietnam is going to pay 46. Your graph was wrong. You said 32% for Vietnam. It's actually 46% for Vietnam. It's 32% for Indonesia and Taiwan. Anyway, so the point is that India is paying lower tariffs in the US market. There's going to be a massive shift of iPhone manufacturing from China to India over the next couple of years. And India's share of US goods imports, which was 2.8% before this, should rise to 4.5% within the next 2 years. So that is a huge increase. China's share was 22% in 2018. It is already down to 13%. It'll probably be down to about 8 or 9% within the next couple of years. And India will be one of the big beneficiaries of that shift. So, broadly speaking, I completely agree that this is a buying opportunity in India. In fact, I've been looking for my own personal portfolio to try and add to it. And this is not a time to sell. This is a time to add and look for good bargains after an irrational sell-off over the last 2 or 3 trading days.